We'll get started on the presentation today. So welcome to this webinar here at Lawpath. Today's a really big webinar. We're going to be covering off on superannuation, tax and payroll, the 2026 update for employers. There's a lot of changes that are coming up. So we'll cover off on what you need to stay compliant with these changes and start preparing, including the payday super changes and the impact this can have on your business cash flow and how to be best prepared to tackle it. Now, we've just launched a poll and a quiz here. We just love to gather a bit of information on your business structure, what you're looking to get out of the presentation today, and how we might be able to help you moving forward. We use this feedback to inspire future webinar topics. So if you do have any suggestions for future presentations or things you'd like to see, pop that in the poll that we've just launched up as well. Now, we will be running a Q&A with Tim that will happen predominantly at the end of the presentation, but Tim will also answer questions during the presentation. We've got a dedicated Q&A box, so do pop them in there instead of the chat, and we'll kick off the presentation. Just a bit about Lawpath. So we're Australia's largest legal provider and platform. We've helped over 600,000 businesses here in Australia incorporate and help them with their legal, accounting, and tax needs. So we've been in operation for over 10 years, and just as the slide says, we create smart, simple legal for small businesses. So we have our depository of documents, over 600 templates in our library. We've got access to manage compliance, whether you're registering a company, managing a company renewal, or getting a company change set up for your entities. And we also help you connect with lawyers and accountants on demand in a single platform. So through our legal advice, accounting advice, and our tax plan, you can now access expert lawyers and chartered accountants right in the platform. Now I'll let Tim introduce himself and start the presentation today. Thank you, Tim.
Thank you very much, Ryan. I usually get someone else to blow smoke up me and say how good I am, but I'll leave it just there on screen. I've been doing this for a little while, so about 18, 19 years of experience now. I've done a lot, I've seen a lot, the good, the bad, and the ugly. I'm hoping that you'll join me today coming from a position of enthusiasm because we've got a lot of new changes on board. And anytime there's changes to tax, people get worried. I'm here to say don't panic. The changes are coming. They will affect your business if you've got staff. They're not all bad. Actually, some of the changes are good, and some of them are good or bad depending on how you run your business. So I'm here just to hold your hand through it. Lawpath will be here to support you. Certainly, anyone that uses Lawpath's tax services, you'll see an increasing amount of activity around this area where we extend some transitional support to really help you get covered. Let's kick on to the substance. Ryan's already covered off what we're going to talk through today. Let's get straight into it. But why is it important? I see heaps of businesses, and that's a very technical statistic. I see hundreds of businesses a year that fail at around the 2-year point. This 2-year point is not a magic number. Why do businesses fail at 2 years? Because they've got quarterly lodgements, tax, super, that they haven't covered. And it takes the ATO about 6 or 7 quarters, so coming up on 2 years, to really start enforcing things properly. So you can sort of fly under the ATO's radar for a little while. And then when it comes to this, 18-month period, when they start to notice you, you start to panic because they start to lob tax bills at you or unpaid super bills at you. And the fact of the matter is most small businesses don't have the money to pay for unexpected bills. So why does this matter? These payday super changes, they're really going to bring to the fore some things that would traditionally hit you later on. So this will actually mean, I think, that some small businesses will fail earlier. Now, you might think, I've just told you don't panic. This is going to make businesses fail earlier. This is for businesses that would fail anyway. This is for businesses that will unfortunately not survive, which we know is a reality for small businesses. You try things, you fail quickly, and hopefully you fail cheaply. I'm hoping that by bringing this forward, these super changes and potentially making some businesses fail a little bit earlier than they otherwise would, it's actually going to save you money in the long run. So it's a really, really important topic to keep your eye on. And why is it important? Because the ATO is going to get more and more visibility. The ATO is going to know more about you earlier on and more about your payroll methods and about your compliance. So it's a really, really interesting time. It's going to be a bad thing for people that would fail earlier, but it could be a good thing for those successful businesses because it's much, much cheaper to fix these problems and be alert to these payments early rather than leave it till the end. So the big ticket item, the reason why there are so many with us here today, it's been a hugely popular topic, is payday super. I've got to already compliment you just for being here. I saw a survey come out that 50% of small businesses are not even aware that payday super is coming. So just by your attendance today, you're demonstrating you're in the top 50%. I am going to get you to the top 10% or 5% of knowledge on this by the end of this quick presentation. And again, you don't need to be ready to go tomorrow. You need to be aware and you need to be ready to go by 1 July. Super's been around for a little while, hasn't it? I think it was Paul Keating that brought it back in when it was 3%, and everyone thought, "Wow, what a high compulsory savings rate." We're now up at 12%. Super has worked the same way basically since then. Regardless of when you pay your wages as an employer, which might be weekly, fortnightly, or monthly, the super was still done quarterly. You have 28 days from the end of the quarter. You look back, you calculate based on that, and you pay it then. It was straightforward. It was lumpy. And when we say that this sort of delay would support your cash flow, it meant that you'd be incurring expenses in January from your wages, but you wouldn't have to pay the super on that till April. So for those businesses that could manage lumpy cash, it meant that the money was sitting in your account or didn't have to be drawn out from your overdraft for longer. So you had a real-time value of money. What's changing with payroll super, with payday super, is most importantly, you now pay super, well, from 1 July, you pay super when you pay your wages, whether that is weekly, quarterly, weekly, fortnightly, or monthly, you pay your super at the same time. So the due date where it's gone from 28 days after, it's now due 7 days after payday, but that is including bank processing times. So really, you're actually pressing the button to pay your super the same day that you're paying your wages. So it's a big change. It's a big, that's the headline change. And we've got some people in the chat saying that they've been doing it already. So fantastic. It's certainly optional. I know plenty of businesses that do payday super or do super more frequently than quarterly. And it's a good thing for some and it's a bad thing for others. We'll go into it. So the calculation base has also slightly changed. For lots of businesses, it won't make a difference. You might not notice it. Ordinary time earnings is the old way of calculating what super had to be paid on. It's now qualifying earnings, which is ordinary time earnings plus a couple of things, notably salary sacrifice super and some allowances that didn't previously have super on it, but not a huge change. And your accounting system should have this built in. And of course, the reporting on that has changed as well. You now report more and more than you did before. The rate itself is 12%. You're not paying more super as a result of these changes. You're paying more frequently. So this change is coming into effect from 1 July. So it's on the horizon. It's only a few months away. And typically with big changes like this, I've seen in the past ATO delay, and you'll see things that are announced for 1 year and they'll take 2 extra years to come in. The ATO has really changed its approach in recent years. I expect this will be ready to go on 1 July. I don't think we're going to get a last minute bailout saying it's all too hard, we'll just do it next year. It will be ready to go from 1 July, and certainly the ATO expects there's going to be a little bit of leniency that we'll touch on, but you should expect it to be ready to go from day one, preferably a little bit before. So this means that you can use this time to review your payroll setup, talk to your accountant, check that your software has got it covered, because these things, getting them done now means you're not in a flap come 1 July. So why is this significant to your business? We'll talk in more detail about the cash flow compression, but the idea is you've got to be prepared to pay that super amount more frequently. As some people would say, smaller amounts more frequently. So for people that were really good at managing their cash flow and liked having that extra money in your account, this change is negative because you were always good at timing your cash flow cycles. For lots of small businesses that are busy in their business and don't keep a close eye on that, actually smaller, raw, regular frequents might be better. But either way, you've just got to be aware of it. More compliance events. Now, I spoke to a manager that works in my team, and he actually had a different opinion on this. I'm saying, well, there's more compliance events because I now have to do potentially 26 super payments rather than four. He raised the point, well, if you're doing all of your payroll in one place anyway, you're arguably cutting your compliance events because you're not having to do these quarterly lodgements on top. So we'll wait and see how it actually works in practice and how the software companies run it. There are technically more compliance events, but if it's well managed and it's coming from one source of truth, potentially it's a little bit easier. So greater visibility, this has been an ongoing push. We'll talk a little bit about SuperStream later and STP, which is single touch payroll. This is the move that we've been on. We're well down this path now where the government expects to have great and immediate visibility over salaries and wages. And if you do the wrong thing, it expects you to be punished for it. This is really a government-led push. It's a public policy push that not paying super on time or not at all is wage theft. That's the terminology they use. And they want to treat it like any other company or any other business that doesn't pay their wages. So we're really aligning superannuation into the treatment of other wages and expect to see more visibility on that part. What this does mean as well is that errors will be picked up by the government quickly. Previously, you'd get some leniency if you discovered your own honest and inadvertent errors and you self-corrected, because frankly, the government would take a long time, or the ATO would take a long time to notice. The ATO is going to notice more quickly, so it's going to reduce that window of you being able to self-correct your errors. So what are some improvements? Because I think someone's asked about SGC payments. Yes, there are some changes, and they're actually in the benefit of employers to an extent. Currently, when you're paying late super and you have to go through the SGC or the Super Guarantee Charge system, that late payment of super was not tax deductible. Now, I see lots of businesses when I review new client work and I see what their old accountants have done, they do still claim a deduction for it. That is incorrect. Those late payments were not deductible, which a lot of people think is unfair. I'm one of those people. So I'm glad that one of the changes coming in from 1 July is that those late payments of super will become tax deductible. So if you're being punished for being late, so be it, but we should still get the deduction. We're still paying the super. So I think that's good. The interest on late payments, it was just previously a flat 10% per annum. It's now been aligned to what they call the GIC rate, general interest at charge rate, which is the interest rate you pay on all tax debts, most tax debts. And that will compound daily based on how late you are. The admin penalty is a mixed bag. I've said up to, and I've put it in italics for a reason. And under the current system, or we can almost call it the old system, those penalties were up to 200% of the amount owing. But in reality, they weren't usually that high. You'd be unlikely to see amounts higher than, well, potentially 25, 50%. There was a lot of discretion, depending on who you were dealing with at the ATO, depending on the scale of the and the inadvertence or otherwise of the error. But it was really a mixed bag, and there was a lot of back and forth with the ATO to try and fix that. They're trying to standardize things now. They'll say, okay, first error, 25% penalty, which is pretty steep. Second time, do it again, 50% error. So, and it's just going to be consistent. And what they're saying is that we do not expect to be remitting these penalties. I remember the good old days, even before COVID, but my goodness, during COVID, every penalty or every bit of interest you got from the ATO, you could invariably now call up the ATO and get it remitted. And you often didn't even need a reason. You just said, I'd like to get it remitted. And they'd say, great, go for it. That gravy train has stopped a long time ago. And in this regard, we do not expect to be getting a lot of remittance of these penalties unless there are genuinely unavoidable reasons for doing it. So there are very, very strong incentives to get it right and to put your hand up when you've got it wrong. Someone's just quickly asked on the chat, is the SGC still quarterly? No, so that the system will be, you fix your errors on a per payroll run cycle. So we expect that if you've paid late, you will be penalized on each individual payroll run, not on a quarterly basis. So voluntary disclosure benefits, this is a common thing across the tax system. If you put your hand up and you engage honestly and early, you can expect reduced administrative penalties. I will say I'm not one of those accountants that goes out to bag the ATO and say how terrible they are and how they're attacking small businesses. The ATO at the face-to-face level is run by human beings. They're generally people that have uh, a soul, for want of a better word. They're empathetic. They are genuinely trying to help small businesses. It doesn't mean that they're all the same, but if you are polite, if you are honest, if you've made an honest mistake and you're showing attempts to fix it, you can really get a lot of benefit from an early and voluntary disclosure still. Like we said, if you do pay that amount late, you still get to deduct it, unlike in the past. So that's a good change too. And that idea of proportionality of the penalty structure, and the consistency of the penalty structure. It's not going to be up to who's got the best lawyer or the best accountant that can go in and scream at the ATO and get it reduced. It's going to be consistent for everyone. Let's keep going on. So the SuperStream I touched on very earlier. SuperStream is an electronic way of communicating all things to do with superannuation. This all used to be very, very manual before SuperStream came in, and it was difficult for the ATO to track what was going on because there's so many systems involved. SuperStream is a system that most people don't know about. It works in the background. It communicates with between super funds, between employers, between accounting software, between the ATO to really make clear how much is being paid, what's the category, is it an employer superannuation payment, is it personal, all of these different things. They're going to enhance that system considerably. So there's going to be a lot more data, which is good for the ATO. It's good for compliant taxpayers. It's bad for non-compliant taxpayers. So I think on balance, it's a good thing. Um, Hopefully the idea is if anyone's ever tried to pay super, put your hand up in the chat or maybe scream out to me in the chat. Have you ever had a payment rejected when you've tried to pay super to an employee? In every single business I've ever been involved in, there's just been a constant amount of rejected super payments where you put them in, they bounce back, and it takes so long. And technically, by the time you've actually managed to pay it properly, you're probably late and you probably should be doing SGC. Now, whether you do or not, you've made all honest attempts. I think it's pretty rough. But the idea is with this SuperStream system in the background, they're really going to make a conscious effort of trying to reduce those bounce payments. And the reason for that is it will tie into what we talk to later about the small business super clearinghouse. And that's why. So just a bit of a teaser for that one. There'll be a new process in the background to verify super members, again, to try and make sure that contributions are going to the right place, to make sure it's easier to process, and to make sure that we can just get it paid quickly and reliably. But again, all these things are happening in the background. As long as you've got good accounting software, which I'm sure most of you will have, this will be taken care of for you. So when we talk about reduced friction, super at the moment it creates friction. It's out of step with your normal payroll processes. You have to consciously turn your mind to it. You know that you've got to pay Bob and Barbara their salaries. You know that that's coming up, and you know that they'll scream in your ear if you don't pay it directly on time. Super is sort of less visible for the members, for their employees. A lot of people never go in and check. You see all the time these horror stories of people that haven't been paid super for 5 years because they've actually never gone in to check. Now you can check. Of course, you can log into your super fund. Who does? I don't think I've ever logged into my super fund portal. You can go into MyGov through the ATO and see it there. You get a little bit of visibility, but you have to be consciously looking for it. This idea of moving to payday super is going to reduce friction. It's going to bring super in line with everything else. Hopefully, the idea is it's going to reduce rework and corrections. Fixing super, having to lodge SGC Excel files is an absolute pain in the behind. I do not recommend it to anyone. So hopefully we can just get this done right first and we can all move on. Now, I mentioned earlier that the ATO used to be very, very employer or very business friendly and used to remit things and used to give you long delays in putting new processes in place. It's not the case anymore. So They do have a transitionary stance. So that the commissioners and the commissioner and the deputy commissioners have put out statements. They do interviews all the time. They'll be ramping this up between now and July to say, hey, we're not out there to catch people trying to do the right thing. We will be in recognition of the scale of this change. We will be flexible. We'll give some level of support. We won't go straight out of the gates trying to throw you in jail and trying to throw massive fines at you. But it is just a recognition of the early adoption of this and the idea of what a big change it is. It does not mean that the rules are relaxed. It doesn't mean that you get to bury your head in the sand and only worry about this in September when the ATO comes to you and says, why haven't you paid super? Oh, I just thought, it's new. No, you have to get ready now. You have to take all best approaches to be ready on time. If everything is not 100% working in 1 July, but you've taken every reasonable step, they will show leniency. So this is a common sense approach, but it isn't a relaxation of rules. It doesn't mean that you can just forget about it. So if your software isn't caught up to date, I mean, who knows? One of the big software providers might think it's ready to go, and suddenly on the 2nd of July, when people try and use it for the first time, it fails. That's not going to be your fault. There are huge changes around the back end of how super funds are dealing with this, and if they haven't got it right, it's not going to be on you as an employer. You just have to have done what you can. So the tax thresholds, they're not changing. FY26, good news. We've actually got some consistency. These have been set a while ago, so they're the same as last year. So everything should be fine. Your payroll software should be updated if it's cloud-based. If you're still on a dinosaur system, sitting on a desktop, sitting on a grey box somewhere, make sure that you've just got those tables just in case. Make sure, of course, that you've got tax file numbers for your employees and you're withholding correctly. There's been a lot of change around HEX help loans, where a lot of HEX balances took a haircut, got a 20% freebie from the Labor government. So potentially some of those HEX loans will have been fully repaid by now. Just make sure you're double checking with your employees that they still have that loan, because otherwise you might be over withholding, and that's going to make your employees cranky. So nothing's really changed, but it's always a good reminder just to have a look at your tax settings, make sure you've got your payroll all sorted and you've got all of your employees covered. So your STP, again, this is covered in your software, but if you're in Xero and you're preparing your payroll, you'll see there's a little grayed out box that'll say not filed on STP. It's an additional step. It's been going for a couple of years now, so you should be familiar with it by now. Do make sure that when you're doing payroll, once it's all finalized, that you're still pushing that final file with file STP button, and certainly at year end as well, after 30th of June, it will ask you to lodge that final check. So just make sure everything's set up. If you've got everything set up, and Xero will certainly warn you if it's not, then this will be taken care of behind the scenes. It's not something that you as an employer really need to worry about. But of course, like with all of these systems, it's garbage in, garbage out. So if you've got allowances in your system that you're not classifying as allowances, or if you're classifying as the wrong allowance, Xero or MYOB or QuickBooks is going to tell the ATO the wrong thing. So make sure when you're reviewing things like that you are doing it correctly. If you're having to do adjustment pay runs, which can happen, make sure that you're reporting that as well. And of course, just checking all of those errors as you go. Don't leave it till last minute. Don't leave it till year end. Try and correct your lodgements as you go. It's always going to be more beneficial for you. So these are some typical compliance risks. We've obviously got a lot of small businesses on our platform here at Lawpath. So we get a lot of interactions with the regulators. We know what's working and what's not. Typically, we see a lot of regulatory action on super underpayments. So this is really a big government push. I mentioned before that the phrase wage theft gets thrown around a lot. They're very conscious of super. I've seen some very detailed ATO correspondence where they'll pick up that someone was paid 3 days late and underpaid by $20. They will go to that level of detail if they need to. So don't do a close enough is good enough approach. Make sure you get it right. The ongoing fight, and this has been since I started studying 100 years ago, the definition between contractors and employers changes constantly. There's always new case law coming out. The ATO's approach plays a lag. Do your best, but do be conscious of the fact that if they feel like an employee, and if you think you're getting pulling the wool over the ATO's eyes by calling them a contractor, they're probably an employee. They're probably an employee, and certainly the ATO's compliance approach will be, if we think they're an employee, we're going to treat them as one, and it's then going to be on you that the onus turns to you to prove that they're a contractor. So just be very, very careful. Anytime you think you're being very clever around contractors, make sure you have spoken to a lawyer. And the lawyers on our platform here at Lawpath are phenomenally good at these issues of contractor versus employees because they, like we, see it all the time. Paying super late, there used to be a lot of discretion. Oh, you paid a few days late, she'll be right. No dramas. That's no longer the approach. Make sure you get it paid on time. Make sure you're withholding the right amount of tax. And of course, you've got to complete your STP reporting. You'll see as well, this regulatory focus, it doesn't just mean that you get to do what you want and then wind up your business and walk away with a bunch of tax debt. Uh, a lot of tax debt these days can be transferred to directors under the director penalty regime. And if that scares the pants off of you, have a look on our YouTube page for a previous webinar that I did on that very topic, the DPN, director penalties notices, because they are a little bit scary. Now, what's causing these errors and these risks? If you're still trying to do it yourself, please don't. Please get some software to do it for you. It's much better at it than I am personally. If I had to manually sit down and work these things out, I'd get it wrong more often than not. Get good software to do it. Get current software that's ideally cloud-based, that's updating as it goes, and that has a significant user base where they're obviously motivated to keep it updated. And again, garbage in, garbage out. If you're not reconciling your accounts, if you're just letting it sit there, it's not going to sit there and do it for you. It's usually not going to pay wages or super for you. You have to actually take that final step of doing bank transfers. And of course, for those of you who have employees on awards, awards are frequently updated. There are typically Fair Work findings every year around June, July, where they'll change rates and they might change classifications. It's not one of those set and forget things, particularly where there are stepped out award categories that change over time. So just make sure that you're staying up to date on that. Let's have a quick look at the ATO's little timeline they've got coming up. And bear this with a grain of salt because I'm going to tell you an absolutely shocking thing that I've worked out at the moment. So now through March and basically all the way up till July, start to understand what payday super is coming into effect and how that's going to affect your cash flow. If you're super organized and you've got a lovely cash flow simple spreadsheet where you think you're mapping out your timeline of when your chunky bits come in and when they come out, just make sure you've reallocated those payments, because for some businesses that we mentioned before that have very, very consistent planned cash flows that rely on being able to hold this super liability for 3 months, you're now not going to be able to hold it for very long. So it is going to change your business, potentially for the better, potentially for the worst. Just be aware of it. Start reviewing your payroll systems. Talk to your accountant. Check your details. The time to do this is now. The time to do this is not 1 July. It's not even to do it in June. It's to start working for things. Depending on which accounting software you use, they will be putting out, and they have already put out, a lot of notifications saying, don't worry, we've got this. I've spoken to a few of their software developers. They are still publicly saying, don't worry, we've got this. Behind the scenes, they're a little bit stressed. There's certainly still a lot of work going on to get this done, and they will keep putting out more about this. There are some very technical challenges around this transition period. And I'll give you the example of, you've got a June quarter super liability of $10,000. Under the old scheme, it's a quarterly $10,000 that's built up. You then do your first payroll run in July, on July the 6th. And of course, you've got an immediate need to pay payday super. When you pay super, which one are you paying on the 6th? Are you paying the payday super, or are you paying the June quarter? There seems to be a transitionary rule where that payment will first be applied against the June quarter super, which could mean that you're already late on your July 6th payment. Now, this is all up in the air, and how they track it is anybody's business. Who knows? But just be aware of it. They are still working on things behind the scenes, so pay attention. If Xero sends something out to you, have a read of it. And of course, if you're with Lawpath, we'll keep you up to date as well. So in these systems, they will have testing systems in their platforms. They will let you do a fake run beforehand to check everything's ready to go. And Bree's just mentioned, doesn't it go to overdue first? It does. It goes to overdue first, and then it goes to due. But how it works out which of the two dues is unclear at the moment. So that's correct, Bree. So do your testing as soon as your platforms announce it, and as soon as they allow you to do it, make it ready. Hopefully 1 July will be ready to go. So these are those key dates. This current quarter, the March quarter, is due, same as usual, 28th of April. No change there. 28th of July will be the due date for the last quarter's payment under the old system or the current system. And of course, from 1 July, you're expected to be ready to go with Payday Super. So this is just a quick look at that compliance flow. Get reviewing. Confirm that your allowances and that your salary sacrifice amounts are properly mapped, properly set up in your payroll system so that super will be calculated on that. Check all your processing is ready to go. Check your fund details. I know a couple of the funds changed their ABN and USI numbers last year, which was an absolute pain. Hopefully they won't do that again. Make sure you've got your STP filings reconciled. You're ready to go on 30 June. And just document your internal processes. It doesn't have to be an essay. Just write it down there. Here's a bit of bad news. And I think this was really a bit of an overstep. So the superannuations clearinghouse, there was one for the small businesses that was set up a while ago. The idea was paying all of your employees to their 8 different individual super funds was an absolute nightmare. And I'm old enough to remember when it used to be done by check. And it was ridiculous. It was so complicated to do. It's way too complicated for small businesses. So they came up with this small business clearinghouse. The idea is you set it up once, you pay one amount into the clearinghouse, and the clearinghouse splits it correctly, depending on what you tell it, to the different accounts. This was a great idea. They've closed it. So that you won't have been able to enter it as a new employer since 1 October. They're now kicking out everyone that's had it for a while from the 30th of June. So that clearinghouse is closed. I don't know why they've done it. I think it's a real overstep. I imagine it's expensive to upkeep, and it was free for small businesses. And I imagine they think that software providers will step in and service providers will step in and do this for them, which of course they will. So Xero and MYOB have their own systems that are, of course, closed to their subscribers, but their subscribers can use it for free. I personally, for some of my not-for-profit businesses that I'm involved in, I use Xero Super that has a clearinghouse functionality through it, and I found it very good. Not perfect, but good. So there are options out there. There are third-party options that you can use as well. I encourage you to do your research, use what you want. I'd say if you're already using Xero or if you're already using MYOB, have a look at their option, at their service as a first option. It's no one wants to pay more fees than they have to. Chris has asked a very good question. Will the clearinghouse be available for the June quarter? It's a very good question. I'm not certain of the answer, Chris. I'm going to get back to you on that one. It certainly says they must transition by the 30th of June, which I imagine means that they must have a new option by 1 July. I'd be surprised if you can't lodge your final one through June, but I'll reach out to you privately on that one. Good question. So, of course, why does this matter? You've got to have a new solution. There's no option. And if you wait until you're locked out on the 30th of June and come 6th July on your first pay run, you're looking to use it, well, you're going to have to scramble. So get your new system used early. I'd almost say to those on the chat who are a bit surprised by this news and want to know how it's going to affect the June quarter, I'd get ready to pay the June quarter with someone else anyway. If you're going to transition, may as well do it now. So I'd get testing on your new solution too. Don't just think it's going to work. Just a general question. Some people are asking, well, if I've used a particular super fund, set up an account as an employer, that won't be a clearinghouse. So that will work for any employees that use that particular fund. But most most businesses, you'll have people with a HESTA or a REST, a CARE, they'll have accounts all over the place. And so you'll have to use each individual super funds or use a clearinghouse. So that transition action plan, just like we said before, it's all about reviewing what you've got, finding a new solution, testing that checking that you've got the correct fund details. Great time to do the whip around to your employees. Hey, can you just confirm that this is still your details while it's time? Get your payroll cycles ready to run in testing, and then get ready to go live from before 30th of June. So what do we do when we say preparing for 2026? Well, it depends what you call your names. We're in 2026 already. Preparing for 1 July. That's really what we're talking about. Here's just a checklist that you can run through again after the chat. I've deliberately left us a bit of time for questions at the end, so we don't have to spend too much on this. Again, it's very much the same solution every time. Do your research, check your systems, check your details, be ready to go early. If you're ready to go in March or in April, that's fantastic. As long as you're ready to go in June, that's absolutely fine. In terms of cash flow planning, if you don't already do cash flow planning or it's all buried up here, time to get it down on paper. This is a common refrain of mine as well. The businesses that succeed that I see are far more likely to have a budget and to track their progress against budget and to have a cash flow. Just a very simple one. Doesn't need to be the world's most complicated solution. It needs to be as complicated as you need it to be, but ideally as simple as you can manage. So even if it's just cash in, cash out, and you know when it's coming, but it's time to review that because Super is going to make a reasonable change. I'll show you just at the end of this. We've pulled together a really simple calculator that basically demonstrates for a small business. You can literally go in and tell it, how many employees have you got? What's their average pay? It will tell you the impact to that in terms of your cash flow. And it uses a term called cash float, where we say, how much previously were we able to float? How much were we able to keep in our bank account before we had to pay it 28 days after quarter end? And what's the cost of that to having lost that? Use that calculator, build it into what you're doing. Maybe some things in your business will change. Maybe you'll have to change your collection cycle. You might say, okay, it's time to actually collect our invoices earlier, or maybe it's time to pay our expenses later if we can rearrange that. Maybe we need more of an overdraft. Maybe it's time now to go to the bank and say, look, this payday super is going to make a $30,000-$40,000 change to my business. Can I apply for an overdraft? Anytime you're doing this early, banks have confidence. If you're coming to them on the 6th of July when you're doing your first pay run and say, I can't afford it, I didn't realize super had to be paid, that's an urgency issue that the bank probably gets a little bit worried about. If you've had that conversation with them in March or April, it's far better for you. So again, are your payroll systems ready? Are you making sure that everything is set up and ready to go? Here's a quick checklist. And again, for anyone that's missed on these checklists, these slides will be available. You'll get sent everything. So don't be afraid to just let it wash over you. You don't need to take screenshots if anyone's got their camera out, but you're welcome to as well. What are our final takeaways before we move to Q&A? I'm like a broken record. Anytime I do these final takeaways, it's always the same conclusions. I've managed to get rid of the one that says do good record keeping. That's usually my first one. But with all of these things, with all change from the ATO comes a fear, comes a degree of panic and agree from some people, particularly some commenters out on LinkedIn or any other of these services, where they'll say that this is the worst thing to ever happen and it's going to crush small business. For some small businesses, it will be a difficult adjustment. For some, it'll be a welcome improvement. Just do your research. You've come along today, you know more than most, you know it's coming. How is this going to impact your business? Don't go doom and gloom, actually map it out. Use our calculator to see how things are going to change for you. Transition early, plan early, be ready to go. Don't let this come up as a surprise and where you need to suddenly set up all your systems and you work out that some systems don't talk to each other. If you've had those sort of issues in the past, now's your time to really take early action. And it's a great opportunity actually to look at your payroll data. A lot of small businesses do treat it as set and forget because they've got more important things to do, like running their businesses. But it's a good time to say, let's actually take an overall look at our payroll data. If we actually got all of the details, when I set it up, I didn't actually know how to do allowances. I put them in as some other crazy thing. It's a good opportunity to have a look now because you're forced to. And if you're forced to do something, it's like the big bath theory. If you're going to have it's like for those of you who've got kids, if you're going to have to give your kids a bath, make sure it's a big one. Do the hair, do all the smelly bits. It's exactly the same when it comes to compliance. If you're having to look at your systems anyway, well, let's do the whole kit and caboodle. So understanding the SGC reform. Look, if you're always paying your super on time, you probably don't care about the SGC reform. If you've been hit by it in the past and you've potentially know that you will in the future because you're not that organized and you're going to pay super late again, you should really understand this reform because it could be worse for you. It could be better for you. But the one thing I would say is that non-compliance will be easier to spot, quicker to spot, and there'll be less leniency from the ATO. In terms of using your system improvements, if your system's set up, the system improvements will happen behind the scenes. So don't get too excited about it. Get support early is, again, that's the Lawpath model. The idea by being on a subscription service where you have access to your accountants and you don't get a 6-minute increment bill from them every time you talk to them. The idea with having someone trusted in your circle that can handle your tax compliance means that you are far better placed to get support. And for some of you, that will require some legal support as well, which we're very happy to provide. I might hand you over back to my wonderful colleague, Ryan, just to talk a little bit how Lawpath can help, and then we'll get cracking with the Q&A. Just very quickly, while Ryan's talking, feel free to drop more questions in the chat.
Perfect. Thank you very much, Tim. Very informative presentation. I have dropped the link in the chat as well. Lawpath does have a payday super calculator, so you can kind of run the metrics on your payroll and see how much impact it will have based on the number of employees and the salaries as well. So that's free, and you can use that one. Just a little bit about Lawpath and how we can help. So as I mentioned, we do have an accounting subscription service, which provides unlimited calls with our chartered accountants. So we have 6 or 7 different accountants here, so it's not just one. You can speak to Tim as well and get these accounting questions answered, modeling impacts on how it might impact your business, looking through your accounting software as well. We've also got a tax service as well. So if you're new to Lawpath and you want to look at, getting Lawpath to be your ATO agent and filing these BAS returns, getting some annual tax returns looked at for yourself personally, but more so for the business. And then in terms of tax planning sessions, that's something we can offer, as well as a preparation of financial statements to assess where you're at in your business in terms of cash flow and profit and loss as well. As you can see on the screen here, we can book a free call. So Lawpath is actually offering this at the moment. If you've got an established business and you're looking to just tidy up the accounting and put a bit more compliance and understand how these changes to Payday Super impact you, drop your name into the Q&A box or the chat, and one of our team will give you a call this afternoon to book in that call and help you understand a bit more about Lawpath services. Now, we do have a exclusive webinar offer for everyone on the presentation today. We're offering 20% off our legal advice plan. So if you are looking to get a bit of legal advice across a variety of areas, including business structure, employment law, contractors, superannuation, there's the code for that one. We do have deals running on our accounting and tax services. So if you would like our best offer and our bundle pricing for everything, just drop your name into the chat and the Q&A. One of our team will give you a call. If you are using Lawpath services, you might be on one of our tiered services. We can also discuss other services that we offer, such as if you're looking for more in-depth accounting services like tax planning, or you're looking at other matters as well. Just drop it all into the chat and our team will reach out. Just meeting some of the accountants. As I mentioned, we have at least six accountants who work on our accounting advice plan, but more broadly, we have 12 accountants here, as you can see. They all have different specialties. We have people working, helping you get set up on a zero MYOB, all of that. But then we have our more strategic partners as well. So as you've seen from Tim, he's very knowledgeable. He's been working at the director level for a long time. So he knows the ins and outs of accounting and what you need for your business to not only stay compliant, but to thrive, to scale the business. So these are some of our experts that you can chat to. But again, if you are interested in booking a free call or learning more about the Lawpath subscription services, we'd love to help you. Awesome. I'll pass this one back to Tim for the Q&A.
Thank you very much, Ryan. Just while we get rid of the echo there. I'm going to do you one better than that legal advice plan offer as well. I know that we actually have an offer for webinar attendees in relation to our tax services as well. So if you do just drop in the chat that you're interested, I'll make sure Ryan shares with you the details of that offer. I always like to help out people that come to these things because I really enjoy and appreciate your interaction. On that note, let's go cracking with the questions. Whether we'll get to all of them or not, I'll do my absolute very, very best. Let's have a go. So I'm going back in time all the way up the top. So we've just got some general comments. We've got a bit of back and forth that for some people, from a cash flow perspective, this is good. Certainly some people like to have consistency, smaller payments. For some people, it's bad. For some people, there's a genuine disagreement there in the chat, which is absolutely fine. Both are valid and both are valid for your business. It's really about just understanding that, whether it's good or bad and what you need to do. That's the most important thing. So we've just had some general questions. Well, what happens if your employer doesn't pay them on payday? Then they will expect to receive a fine. They'll expect to pay interest for every day that's late, and will expect to come under close ATO scrutiny. So that's a very important one to look at. We've had some questions about, does this change for a significant global enterprise? We've got some big dogs in the chat. So a significant global enterprise is a business over $1 billion of revenue. Potentially, you're a Australian subsidiary of a much larger company. SGEs have additional penalty regimes on top of this penalty regime. So I dare say they'll be smacked around some more. The government does like to hit them pretty hard. Always a great question that's come through on the chat about ABN contractors working on a fixed schedule and hours labor. It's not typically, it's not actually under the scope of what we're talking about today, but yes, there are plenty of contractors for whom super must be paid. The definition of what was previously OTE, ordinary time earnings, can include contractors when they're working in an employee-like situation. So even where there might be validly not called an employee for wages purpose and tax withholding, they might be an employee for super purposes. So definitely great question there. You should really get some advice on that. They could well have to do that. James has asked, is the superannuation amount that's late still non-deductible? Happily, we answered that later on. No, we do. We will be receiving now tax deductions for late super. So a big change, which is good. A good question here about, well, what happens if the employee gives you the wrong super accounts? Yeah, or they change their fund and don't tell you. I've seen that happen a million times. And I think I mentioned later on that I've seen super payments bounce all the time because I've been given the wrong information. You just do your best. So if you do, I mean, you are obliged to receive details. If you've done everything that you can, then that is still grounds for remission and it will be going forward. But part of the improvements to things behind the scenes are going to be when you add employees, you can actually test those details using SuperStream to confirm that they're correct before you process. Previously, you wouldn't realize there was an issue until you actually paid the fund and they sent you the money back. That will be avoided in the future. So that's a really good improvement. Great question there. In fact, we had a couple of questions, a couple of questioners along the exact same lines. So Catherine has asked, if you've got a contractor working 1 or 2 days, does the ATO see them as an employee? Big legal question there, like I mentioned, employee versus contractor. If they feel like an employee and the fact that they're only doing 1 or 2 days as opposed to 5, you're probably in with a shout of having them captured as an employee. If they turn up, if they do a 9 to 5, you pay them an hourly rate or a day rate. They work using your stuff in your office and then go home. they feel like an employee to me. But of course, not specific legal advice. You should reach out to Ryan or one of my colleagues, and they can certainly help you get some legal advice around that. We've got some other things. Here we go. Some questions about the clearinghouse. Yeah, so it's still a bit up in the air. Whether the clearinghouse will take June or not, I suspect maybe it won't now because they are being quite strict on that. I would definitely advise getting rid of clearinghouse now. I'd say certainly in time for March quarter, which won't be payable until April. I'd be using March and April to find an alternative. A question came later in the chat. Well, can I just use Zero Super instead of a clearinghouse? Yes. So Zero's super functionality, where you're actually paying your super through Zero, is instead of a clearinghouse. So when you've got your super all set up in Zero and you've told them fund name, fund ABN, employee name, all of those details, TFN, and you go and pay your super through Zero, it will do that. If you've actually set it up correctly with direct debits as well, it will actually withdraw the money for you. So Zero Super is quite powerful in that, and you can avoid having to have a different clearinghouse. Very helpful comment there. Kathy has said that Excel does have a cash flow template. Yeah, they do. Actually, the Victorian state government, shout out to my Melburnian friends, the Victorian state government has a really nice, simple cash flow template that they've published on their website too. I dare say I've borrowed that once or twice and spruiked it up a little bit, but for a really bare bones approach, don't think that you need to go out and buy an expensive new accounting package or a lot of small businesses, your cash flow better than anyone else. So if you just have a simple way of demonstrating that based on actual past data, that's going to be the best thing for you. A few people asking about the calculator. I can already see I've got our head of marketing is already they're getting some links, so it's great. Go and play around with it. It's quite useful. That link's been shared in the chat a few times. Here we go. Look, a question that's someone saying it is doom and gloom for businesses that are time stretched and time poor. Yeah, I can certainly I'll accept that that's a valid feeling. Anytime you have to learn a new system when all you're trying to do is go out and do business, it's a huge time involvement for you. I just think hopefully you only do it once. That's the only thing I can sort of say to try and allay that doom and gloom is that if you do it properly once and get it set up and running, then hopefully it's not an ongoing issue. And again, if you do set it up and it's all integrated, it will actually reduce your super compliance time ongoing. But certainly during this transition period, I really feel for you. It is difficult to do. So another good question, if employer owes super to the employee, do the new rules apply to the overdue? My understanding is that they will segment old overdues from new, and they will treat the old overdues equivalent to the old system and the new ones to the new. How they do that? Very good question. There's a few areas of technical transitionary periods where we're not sure yet. So we'll wait and see on that one, Bree. That's a very good question. Question here, do I envisage the ATO taking over at some point in time the super payment function, given that they are already getting fed the STP data? No, I don't, purely because I think that they've basically handed this off. They've said that we don't expect to have to do everything for you. We actually expect payroll providers to build this into their services. The ATO is very deliberately, if anyone's used SBR, which I can't remember what it stands for now, but the idea of letting software talk directly to systems rather than having an ATO replication of systems is something that they're very keen on. So no, I don't imagine that the ATO will be taking over, and they've already dropped the clearinghouse, so I think that's a pretty clear intention. I think they expect that software developers will interact with the ATO systems directly. Someone's asked, are there free avenues with the clearing house closing down? I'm not sure of any. There might be some out there, but certainly Xero and MYOB's one is free in as much as if you're using their system, it's free. If you're using their payroll system, it's free. But I imagine there will be other entrants to the market trying to mop up the rest of everyone else that's coming off. So certainly do your research there. Really industry specific question coming through from Vicky there on sharing, which is a very interesting business in itself. I would say let's get in touch because that's quite specific to your business, and I don't want to provide the wrong advice here. I know that there are traditionally an acceptance of shearers who provide their own equipment and who are paid on a fleece rate or rather than a day rate. Then they traditionally are employees, but they can be captured under the super rules. So there's a lot to work through. Get in touch with us, and we'll help you work through that one. Great question. This is a really popular one. Someone said, if you're a one-man army and you've got no employees other than yourself, do you get penalized for not paying super on time? Yes. If you're an employee, if you've signed up and you've put yourself on payroll, you have to pay yourself super. And the number of times this has come up at really what you would think of as really sophisticated, well-funded startups and businesses where they've gone, well, we won't pay super because it's just to ourselves and it's no big deal. And they get absolutely hit out of the park by the ATO, who says, no, you do have to pay supers to yourself. More than that, you can actually get yourself in more trouble because they don't allow you the excuse that it's my employer's fault. They say, well, you were the employer. So they hit you from both angles, actually. So if you're on payroll, you do still have to pay super to yourself. There are alternative ways of remunerating yourself. You could be using dividends. Um, I would say directors' fees, but technically they have super on them as well. So if you're on payroll, expect to get caught up in that, Daniel. Thank you to the people that jumped in and confirmed. SBR stands for Standard Business Reporting. I didn't commit to anything because I wasn't sure. You see it all over the place though, but this is the way of having these software talk directly to the ATO. And thanks to Ella for pointing out that MYB also have a payroll only subscription. Amanda, a question after my own heart, because I was joking before, I actually am the president of my local parents and citizens associations, and we've got employees. Yes, payday super is absolutely coming for us, and it's coming for you too, Amanda. So there's no carve outs for small not-for-profits, nothing like that. They say too bad, too sad. If you've got employees, you're on payday super, and good on you for putting your hand up because we don't get a lot of thanks, Amanda, doing the PNC gig, but it's important work. I'll give people another couple of minutes, but otherwise we might have cleared all the questions. You're very welcome, Deepak. Thank you. Here we go. I can see there's a Q&A section where we've got some questions as well. Let's see if there's anything in there as well. In fact, funnily enough, the first few questions have already been covered. Why would super be rejected if you've given the wrong TFN or the wrong mismatched name of your employee? You will see that super payments do get rejected. You've given the wrong sub-fund name. Some funds have multiple names. So there's any number of reasons super payments can be rejected. It happens all the time. Someone's asked about the idea of a solely owned company. That's just the question we raised there, that you do have to pay yourself, even if you're the shareholder and director and employee. If you're an employee, you pay super on your own wages. So exactly the same question. Jessica's asked, is the super rate changing? No, and I don't anticipate it will for a few years. It's been a steady rise from 9 to 12%. I think that's where it's going to stick. I don't think there's any appetite for that to increase. I'm going to quickly jump back into the chat. Someone that said, oh, this is beautiful. You said I studied more than 100 years ago. How do I keep myself looking so young? It's got to be a filter because I feel old. I've got 3 kids now. I'm 38. I feel like I have been doing this since I was 17, so not quite 100 years. But no, I appreciate that. Any positive comments are very much appreciated. So just checking that we've got no other questions in the Q&A section. James has asked a very good question. Look, no, the super, if you're doing payday super, it doesn't mean that that money has to hit the super fund account that same day. That's why there's that 7-day processing period. So yes, you just have to have made payment and have processed it on time. That 7-day it feels like a long time. You actually see a lot of processes that take a lot longer than that. Even to, got to put their name on record for here. The zero super payment can take more than 7 days quite frequently, but there are lots of changes in the background to reduce that time. So yes, James, it doesn't need to have landed in the super fund account on the same day. You have to have processed it on the same day. A few of the other questions we've already asked elsewhere. Someone has just raised the question. Yes, if you are liable for contractor super, they're covered under the same payday super rules. Craig's asked, can you discuss the ordinary time earnings versus the qualifying earnings? There's two main differences. It's the super obligation is the same. There's just two additional things that are covered under the new definition. That's if you're doing salary sacrifice super. So if instead of paying wages, you're putting money into a super fund, there is super on that, which seems silly, but it's actually fair if you think about it. So salary sacrifice super is now included, and some allowances are now included that weren't previously. They're the main differences. Michelle's asked, how will this change impact insolvency appointments? I imagine there'll be more or early insolvency. That's probably some of these insolvencies that would happen 2 years down the track will maybe happen more frequently. I'm just going through this. Some questions about would a partnership avoid paying payday super? If it's a partnership distribution, there's no super on that. There's super if it's a partnership that has employees, there'll be super on for the employees. Here we go. Chris has asked, how do we use SuperStream? SuperStream is in the background to everything that you do. You don't yourself sign up for a SuperStream software. It's just the way that there's different software and the ATO talks to each other. So you don't really need to know about it too much. So there we go. I'll just see if there's any more questions come through the chat. Thank you to everyone that's left their thanks. That's much appreciated. Oh, thank you, Bree, again. I am passionate about this. I'm passionate about supporting small businesses. It's what we do here at Lawpath. We want to make sort of the top end of town advice more accessible for small businesses. We'll just see. There's a question regarding new employees while we're waiting for details, or young people who haven't set one up. Yeah, it feels unfair, doesn't it? That there is an obligation on the employer that you don't get to say, well, my employees are useless and they haven't got around to it. You are actually required to do it, whether it's your fault or not. Again, it would be a question of remission if it came up. You could say, unfortunately, I've been trying to get this employee's details. It is still your obligation to get those details or set one up for them through using one of those the low fee options that are out there if they really don't want to do it themselves. A question about labour hire contractors. Is it correct that labour hire agencies cannot accommodate a request to salary sacrifice super? I can't think of a legal reason for it. That would really be down to the labour hire agency themselves. It's really up to them. It's an administrative hassle, which is probably why they don't want to do it, Annie. This question's come through a couple of times. Which date will be used for contractor super payment? Invoice date or the day the invoice was paid? That's a very good question. I imagine on the date of payment, but that's Zahid, I'm going to get back to you on that one. I've just asked Ryan to just let me have a look. That's a very interesting question, so I'll get back to you. Someone's asked, can I explain the SGC tax deductible change? So I did mention it earlier. All that's happening is that currently if you're late paying super using the SGC system, that you didn't actually get a tax deduction for that. So you really missed out. Now it's going to be deductible. So now when you pay super late, you do at least get a tax deduction for it. So that's the simple way of doing it. Michael, we've mentioned this just earlier. You must have missed it. If you are the sole director with no employees, can you avoid it by not paying salary? Yeah, well, there's no superannuation on dividends. But of course, paying dividends comes up with a whole new area of difficulty. Do you have enough profits to declare that dividend? And what about the franking situation? Have you thought about tax? So yes, anytime you're paying yourself a dividend, there's no super. So from that side of things, you do avoid payday super, but it will give you different questions to raise with your accountant. Very happy to get you on board and help you out with that as well. There's a question about stapled super funds through the ATO. No changes to that. Yep. So you can still ask the ATO using using that system if they have do they already have a stapled super fund? There's no changes to that as well. Yes, we have the YouTube recording will be up either today or tomorrow. Just search for Lawpath, you'll see it. And I think that's all that we've got time for. So please do just drop in the chat next couple of minutes while we're wrapping up if you'd like us to contact you if you haven't already. Ryan will be in touch. I'd love to have you on board. We always welcome new friends, new members of the Lawpath tax family. We'll be running a heap of support between now and July for our customers. We're going to make sure that everyone's well and truly set up. Thank you very, very much for your attendance today and your engagement. It's been an absolute pleasure.